to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And if you don't come on in each and every day and you spend your time gabbing with the guru, perhaps you should consider coming in every day. Let's go right into the charts and check it out as we go in. Bada bing, bada boom. We got our diagonal fib. Seem familiar? We've had this here for 2 months now. And it's quite interesting. We use pitch fans. We like these diagonal fib tools. You can get them over in your fib retracement GAN fan area, pitch fan. Check it out. Study it at your leisure. But it's quite fascinating how we were holding these ranges back in January, and we've been holding these nice diagonal fibs in these ascending channel manners, and I've liked these for over a year now, so I quite like them. And we have broken out above the 786 region, went up, wicked to the 886 region, and are coming back down beneath the 786 region. We could come all the way back down to the 706 region at 28,659. That would recover this gap over here, and yeah, wouldn't be out of the question because of the liquidity, which we go over every single day. But what is the liquidity? Let's go ahead and take a look at High Block. This is $70 of value that we bring to the channel every single day. We don't bring gabs and voices. We do funny skits, but we go over the levels. What are these levels? Well, it's when people lock their liquidity in the charts and don't use a stop loss, so they get burnt to a crisp by the market maker. So let's find out where those stop losses are and where their liquidation points are, shall we? So, as we were pointing out on the live multiple times how the 20 billion in long liquidity down below was being targeted, and these imbalances in longs was being located down at 29,222 and 29,633. We pointed out these pools of 278 million and 368 million respectively were targets on the table, and they came back with a fury into these pools. We lost some pools to Father Time, but we left them on our charts. We'll get to those in a minute. Those pools are also 100x targets, which are still not reclaimed just yet. However, what goes down must also go up, and what goes up must also come down. So they previously did a little bit of a V-shape to recover some of this late time short liquidity. So what does that mean? These shorts opened up as we were dropping. That's a no bueno in my book. You do not open shorts as we drop. You open them up at premium level of the highs. So these large pools of 328 million bubbles in shorts did open up in a loss right now. So they are kind of creating this imbalance in the immediate to imply coming back to a retrace to at least take out this little pool at 29.88. If I do say so myself, it does look like that's the case, unless the weighted targets that we were talking about over the last week or so do outweigh these. It could come back and gobble up. It already gobbled up one of the three, but it could gobble this second one, to say the least. So that looks like it's right on the table to be taken. So the problem with this time frame is it's the minute time frame of Bitcoin, and so it loses these 6 days of data over time. So all the previous days that we've been going over with all the pools below seems to have been lost, but it's still there open and waiting. So that's why we marked them off on our charts, so we don't forget those 100x pools that exist below, so they can get burnt to a crisp.
Fatality.
Yes, you got to be aware of the game, and it's a game of traps and through. So when you see consolidation at the tops of things, don't ride those Mario flags to the downside, folks. Please consider entering shorts at premium levels and buying longs at discount levels. Not financial advice, of course, but it's just good economics. You buy at a low and you sell at a high. That's how you do it. That's how the game operates. Let's go take a look at the higher time frame of the liquidation heat map on the higher time frames, and we can bring it to you fast like fire. So here we go. Let's see who's in the live. Shout out to everyone here on the live. Congrats for everyone, you early birds getting in here early. Thank you for coming on in. Shout out to everyone here. So let's go ahead and take a look at that. So they came, we're going to skip the 12-hour, not my cup of tea. Let's go to the 7-day. So we were talking yesterday about how these, even though the higher time frame at 31.2 did suggest these 38 billion on the yearly, which we'll get to, there was a larger outweighing pool down below on the 6-month and the 3-month. We did put it out to Rainier's group. Shout out to my man Rainier and all the others in the Discord there. It's a free Discord, folks, so if you're paying someone who's not giving you the proper information, perhaps you should consider joining Rainier's Discord for free. Can't beat that price tag. So we went into this, into these pools here, and we could come back into these other pools down below just off the immediate time frame of the 7-day. Nothing seems to be waiting for us above, although we did see those shorts open up immediately, so we could see that recovery before it continues back down into these regions of, it looks like about 15 billion down here on the 7-day, give or take. I'm not going to add it up exactly, time is precious, so let's move on to the monthly as we expand our vision. So this was previously taken out at 31.2. We talked about this pool, even though the pool to the upside is being paved to 34K, it's just not there in terms of heat signature yet, because the heat below is just getting too hot. Longs are not paying themselves, particularly at 2022 and below. We'll get there in a minute. These external liquidity pools are just hot to the picking, and they just are calling for more, which they're not trimming as they go, so it's just getting too hot, so they work against their own trade. What is trading? It's a game of traps. It's not it's not bulls versus bears. It's liquidity versus liquidity provider, and the liquidity provider goes where the liquidity lies the most. So if there's more longs beckoning for upside, then it does not go in their favor and eats them alive. And same with conversely with the shorts. So it's like a game of tug of war. Whoever has the most on the either side loses the trade, but wins the tug of war as the price action comes towards them. So in this case, we had the imbalance to the downside, which we suggested over the last weekend that we could see a Bart Simpson back down into this region based off the liquidity. We were not fooled. We did not see a bull flag, none of that stuff. So the monthly is also considering that we could come back into this liquidity down below here, 29.2, 816, 15, 22 billion. So in the interim, this could continue throughout the New York session. Ideally, you'd want to continue this retrace even further down. We'll get to those levels on the fibs later, but let's go to the 3-month time frame. The 3 and the 6 month is where it starts to get interesting for me. I posted these to Renier's group. So this is the 3-month time frame, which is showing immediately we previously recovered this, but we still have 14 billion below at 29K, 10 billion at 28.8, and 5 billion at 28.6. Now, you just don't have that same level up above, although if you go up here, you do see that 37 billion at 31.2. We talked about in the interim at the last night's stream just where the immediate price action imbalance was, and there was more down here than up here, so it justified the move below. Okay, so overall, you're just seeing these pools above, while they do pave a path to 34.8 and beyond, 34.8, these pools just don't get outweighed by all of this down below. So you have large amount at 25K, over 100 billion. You got another 100 billion at 22.5. You got 300 billion sub 19.4. So you got $500 billion resting here, just not paying themselves or closing out their trade, believing in a pipe dream up to 48 or something. I don't know, but they should consider closing it to allow price action to stabilize so they could possibly go higher. It's not going to go higher as long as there's dead weight on the price of being the longs. It happened before and it will happen again. It's just a cycle of the market maker slurping up liquidity. We call it the noodles over here. Wait, where did my noodles thing go? That was only on the, over here you see these noodles of price action. So yeah, here in the 6 month also corresponds with that narrative. Down below sub 19K, you just have huge amounts of liquidity down here, all the way down to 13.5, nearing 100 billion at 13.5, and above just that sparseness. So while those pools are attractive, you just the retrace is just a healthy thing. Even if you were going to continue to be bullish, you have to induce more short liquidity pools to develop. Like here, they had about 100 billion they left here as they retraced down, and then they came back with the fury to take it. So there's nothing to stop them from just shooting up and taking it at their leisure. It's a game of traps. It doesn't matter. Price action and the value of the price is determined by the market maker and the liquidity providers, who just go where the money is. So it doesn't really matter that the Silicon Valley Bank was bankrupt here. They just slurped right up to the liquidity as everyone was getting bearish, and no one was willing to long, so it was the perfect timing for them to come up. So the news is a catalyst. Everything's an excuse to just grab money. They'll use whatever it takes. It's not about bullish scenarios and good news, bad news. It's just about where the money lies, folks. I hate to burst any bubbles if that's what you thought otherwise on, but this is why High Block Capital is so amazing, because it shows behind the curtain of where these pools live. And what the best pool of them all to check out here is the yearly, where people thought the 19K double bottom was in and we're bound for upside. Everyone's dreams and hopes were dashed, though, because all of the hundreds of billions of dollars down below, over 600 billion was taken during that October-November crash with the Sam Bankman-Fried and the whole FUD out there. So while there was shorts above, there was just an imbalance to the longs below. They ate it all up, and this is the proof in the pudding that they leave some on the table. So they left that 15.2 around to develop so that the shorts would keep their bearish sentiment high. So the same thing happens. They leave some on the table for longs so that the longs think that we're still going higher, so they can retrace. And we went over this yesterday. You can watch the stream to figure that out. But we said they go back to give the inducement so that the people remain in their trade rather than take profits. They hope for something better, and they can reclaim some of the profits they paid to these longs. So as we zoom out to these time frames of the year, the pools start to fade into a greenish color, but that's still 100 billion. But yeah, we still have some 200 billion down at 15.2. We don't see any yellow up here. So while the path is being paved to 13.4, 13.8 rather, and beyond, and you have these double digits of 50 billion and above, we could see 35K. And I never said that before. Back here at March 6th, I was not saying the same thing. March 14th, I was not saying the same thing. It's a recent development to see these pools get thick, so that's not out of the question. So are we definitely going down to here? Not necessarily, but at 29.2 you have 48 billion. If you take everything out of the equation and look at the yearly time frame, on this small little scale, come on, let's get it, yeah, like this. So if you look above, 34 billion at 31.6, 48 billion at 29.2. So just where we are currently, it stands to reason to go get this 29.2, 48 billion, then to go up to 31.6, 34 billion. That's what I would do, because it's just a hop, skip, and a jump away, and it starts to pave a path below, but then there's not much below, or is there? There's another 80 billion down here at 27.2 and 26.8. So it just depends on how far they would like to move. They have to continue paying these longs, so every one of these pools continues to get paid. All of these hundreds of billions of dollars getting paid at X amount of leverage is just getting annoying to them, and then the retrace is a real thing that gets them to close their trades so they can actually move in the direction they hope. This is why we have this retrace here to the 618 of this impulse, daily impulse to the upside. So we'll just go to the 6 month and leave it there for a second and go check out the fibs. If we cannot reclaim this 786 region, then we can expect to come down to finish this gap on the daily time frame down at the 706 rather. So let's go to regularly fib scheduled program here. So we had this pool down here, this 100x pool that got knocked off of the time frame a long time ago. So we were seeing some 100x, I think it was like 278 million in 100x longs, if I'm not mistaken. We still haven't gotten to that level at 29,333 just yet. I would expect us to come down to that. We did show you just a moment ago that 29.2 did have that juiciness on the yearly time frame, so there is something down here to reclaim on the yearly time frame as well. Normally when you recover a vector candle, you recover about 50% of it. What is the 50% region? Well, we go from wick to wick. The 50% region would be about here. Let me just move this there and then delete this. That would put you at the 618 region for this, which is a healthy retrace amount. Not only are you recovering some of this gap, but you're also going back to an impulse retracement level of the 618. It's a healthy move for even a long play. So it's not bearish, it's just a healthy retracement at this time. And yeah, that's where we were looking at these two characters down here. The second pool of liquidity is at 28,742, which coincides with the 706. I'd like to see that personally, but we could see it just a bounce at the 618 on the daily time frame. So yeah, I think I'm not going to change these yellow lines are daily support levels that we seem to have lost. We tried to reclaim this previous resistance, previous support, these daily close levels. We closed out a few candles here, 2 days here, and now if we close beneath it, then that's now going to become resistance. Interesting to note. And with that in mind,
Accessing data.
Hey, what? Oh, who's accessing what now? Hey, you guys, what's going on? Are you? Oh, what?
All systems operational.
Whoa, where am I? Is this the? Hello? Are you guys hearing this? Seeing this? Wait, time, space, distance, and separation are but mere illusions. Projections cast out of the zero-point energy in the 7th dimension collapse through the quantum probabilistic foam into a spin-up or spin-down electron pair in the 5th dimension. And then you're telling me those electrons traverse back and forth through the 4th dimension as positrons and only one electron created all of this? So that means nothing beyond you exists separately, and everything is a manifestation, a vibration of holographic probabilities, realizing itself on a continuum of self-driven momentum. I get it. It's all momentum. Right. Wow, let's go back to the charts with this information, shall we? Boom. Whoa, wow. Looks like I got some upgrades to my candles. What is this? MomentumMaster.info. Link in the description to find out more. Scroll down to features and toggle it at your leisure and read about it. Interesting. What the? Trend cloud? Stochastic array? What the heck? Well, it looks like we had these crossed down baselines. Looks like DNA helixes, and that was front running this move, and we put it out for you yesterday, right? We were talking about this 22-hour cross before it happened. Interesting. Did we just see the future? How about that? We said it on the 12-hour too. We said this was coming, and it came. Interesting. And we talked about the 8-hour and the 6-hour having this crossover event back here, and it came too. And we're coming back to the cloud kiss. We talked about that cloud kiss idea, and what are we doing? We're kissing the cloud. So all of this has happened before, and all of it will happen again. We even saw this cross down event here to think about shorting the head even. Interesting. And the baselines are kind of over the price, suppressing it in a way. And it looks like you're going beneath the cloud here and potentially coming down to the 618, just like we said. Interesting. I like this indicator. Pretty nice. You got those nice 5s when all the time frames are oversold and overbought, telling you when to get in and out. It's a nice indicator. Sorry, I'll stop. It's funny. But how you all doing out there? What's up, Rayman? Ooh, yeah. So, 6-hour time frame. We were talking about the suppression of the Williams, did we not? We said we were oversold on the stochastic RSI, and I said I'm not buying it because the Williams duck-billed platypus alarm thing here was telling you you're going to get suppressed here. We'll add those later, but no, I'm not going to take them off. I need them for later. But yeah, basically we're seeing the suppression on the 6-hour. If we go to the 12-hour time frame, also we're seeing this potentially alarm cross and open. So we said the 12-hour is just getting started, as is the 22. What is the Williams? Well, you can read about it on MomentumMaster.info. Go to strength, read about the Williams and all that fun stuff and why we put it with the money flow and the RSI together. So you see these back-tested levels of the cross-down events, and that's why we were seeing this occur. So it could just be getting started on the 22-hour time frame, or it could flip on a dime. I know nothing. Light in the absence of eyes illuminates nothing. Visible forms are not inherent in the world. They're granted through the act of seeing. So you got to take what you see in the math and apply it correctly with correct math to see the proper thing as it occurs. So we're talking about the 4-hour getting suppressed by the Williams, and it looks like it got suppressed. It got rejected off our normalized MACD. It's quite interesting how the MACD like interacts with the stochastic. I've noticed that it does that even though it traverses both domains here. It has the spooky action at a distance with the stochastic RSI at key points where it bounces, rejects. So it's kind of these weird kind of spooky action at a distance with the MACD, and then the MACD goes down to the Williams and says, what's up? We might even be there on the hourly. Let's just look at B right now. So the B, yeah, the MACD is coming down into the domain of the Williams saying, what's up, man? You gonna get some juice back, or what's up with you? And the hourly getting rejected here with some PVSRA vector candles to the downside. And we still have some room potentially to go lower. Although we are in the green for the oversold region, the MACD is not yet curving on the hourly. And we're coming back nicely to that adaptive as we talked about. We talked about the adaptive KISS and the 618 KISS. So all of these things were set in stone. So let's go ahead, and I want to do some trading in the stocks today. We just got funded off of one 50K account. I'm trying for a 250K challenge. You can integrate it with your trading view, which is quite nice. So this is my 250K account linked to trading view. I got my other 50K one passed today in 2 hours. Realistically 2 hours, but I had to pick up my son, so it was within a 4-hour time frame. But very interesting. So we're going to be working on scalping the hell out of the stock market. So fun times. Shout out to everyone in the Momentum Master Discord who's already on their way to being funded. I think we're up to like 4 or 5 now. So, all right. So you're getting oversold on a lot of time frames. The 5 minute is getting overbought. So it looks like you're just creating some sort of like bear flag to the downside. However, you're getting a crossover up event, and this is where it all starts. It's got to start somewhere, but it's not at a key level for me personally. So seeing these things at key levels is where you want to see it. Getting overbought. We had previous bear bullish divergence on the money flow. Let's just look at the liquidation levels and see this one more time. This is how we juxtapose everything. So they already came back and gobbled up that one character, right away. This guy, yeah, they came back, got him right away. So these pools up here, 35, there's 123, 200 million down here. So that kind of offsets this. So these two little bubbles of longs do kind of cover this 300 million guy up here. So they could come down into this region to finish the job on, we lost the bubble that was previously here just a moment ago, but it was like a $278 million character. There's a 300, there's the 278. So they got this guy, this guy's gone.
Fatality.
Yeah, so they got that guy, and they got another guy down here. So we're gonna see if they come back down into these regions. Yeah, it's not clear on this time frame, but this is where you start to see this angle is quite nice. I like to see the baseline scoop the price. What are the baselines? You go to the baselines, read about it. It's your first sign of reversal. So seeing these first signs of reversal on lower time frames is where it's at. That's how I passed my eval in 2 hours. Yeah, so we got this kind of coming up nicely beneath the price. So the one thing that's not good is the thick cloud here. The thick cloud, even if you pierce it, you're going to get knocked back down for that double bottom or potential fake out to dump more. So I'm not really keen on the first bounce. We'll look for that second one after it comes back down. So if it does something like, it goes up here, gets rejected, comes down here, then what does it do down here? What's the divergence play here? If it goes and knocks out some of these lows, gets some super divergence, then maybe you could see some sort of reversal, but not really interested in it right here. anything that's happening here is basically just a fair value gap recovery of this 5 minute/3 minute time frame candle we're at right now. So what is that? We're going to take a look at the retracement. So just kind of recovering this void and going back down. That's what we put up in the framework of the Discord. Maybe we could just come back up to here, recover 50% of this and continue further down. The 5 minute 5 minute getting overbought without really going anywhere. You are getting those time frames exhaustion though. This is a precursor. Remember, this is false move Monday too. They could just snap it up. This could be a shoulder, head, and a shoulder out of here. And you get that head and then a shoulder, and it could be something. You are seeing this previous cloud. It was thick here. That's why there was no sign of recovery. Started to thin. They didn't even see any buyback and just dumped out of it. So New York is on the cusp of opening in the next 45 minutes. Let's go look at our futures data for the S&P, which is already ahead of time. So let's go ahead and take a look at that. Where does it want to go? So while the S&P is frozen, this is kind of interesting. We were talking about back here about it possibly going up and rejecting off of this high value area high, so it could come down out of here. We were putting that out before it happened on Thursday, and it did go up to that point, a little bit higher. So you are getting overbought on 15 and hourly. Let's go ahead and go down to some lower time frames here. Actually, no, let's go to the futures one, because that's going to give us the levels in the future, in advance. So you're seeing this shift of the cloud in this weird manner where it's not super thick, but it did stave off the dumpage from this purple area of wackiness, where it was going up and down for days, and then finally decided to make its way back up to the upside. And so on a retrace idea, so this was a rise retrace idea that played out all the way up to the 2 region of this bullish projection. So we can take that off now. It's in the past, and let's just do it fresh, shall we? We're going to take this from top to top and switch this to the pocket. So if it were to retrace back down, where would it come to? If it would come back down, it would come back down to here. We are overbought on the daily, the 3-day, the weekly, same as Bitcoin with the 5-day as well. So coming back down into this region, if you do have a shoulder, head, and some sort of shoulder, like this could be the beginnings of a shoulder that comes down deeper, somewhere into here. Bounce off the weighted moving average / cloud on the daily, I don't know. We could even adjust this and just say it could be from this region, because this was rise retrace, so this could have been the start, so that would coincide with this 618 perfectly. And yeah, that's just the analysis in a nutshell real quick. Yeah, let's just be quick about it, shall we? So we'll just put that there and look at the 22 and below 12-hour Williams, and the 12-hour wants to dump on you, similar to Bitcoin. Hasn't had a chance yet. So New York will bring the fire. Will it bring it to the downside or the upside? Our cumulative time frame volume delta formula is showing that people are offloading positions here across many time frames here, and a lot here on this last indecision doji, suggesting that it might bring it to the downside a little bit. So we'll see if we can catch that on New York Open in a bit. So let's go to the dollar. We put out the idea of a rounded double bottom here, starting to play out slightly, and seeing that build its narrative out of there. You got a shoulder, head, and possible shoulder forming in some fashion. You're overbought on the 4-hour. How does the 4-hour dump on you or not? Let's look at that. You got more room on the Williams there by the looks of it. If you look at the 6-hour, overbought and the 12-hour. So this is one of those times where you're both are doing kind of similar things. The 12-hour can still take you to the upside. You didn't really have that dump, so that could pin the 6-hour if the narrative for everything is to retrace. That could give some juice back to the dollar. If we look at gold, we'll just look at gold real quick because we haven't done that in ages. Okay, gold has been seeing a rise by the looks of it. You had that perfect rocket entry on the indicator there. Perfect. Not even a false dud. Wow, gold is interesting to trade. So if we have this, let's do a trend-based fib, shall we? So we'll take it from here to there, and the retrace here. So we got a rejection off the 706 for that bullish trend-based fib extension level. And if you see the bullishness as people try to store their assets in gold, as they lose faith in the dollar and other currencies and look for stores of value, and they don't trust crypto assets and so on and so forth, they could put some, it looks like they've been storing it in gold for some time now without a steady retrace. The 4-hour has bullishly reset. What do I mean by that? We haven't given back price action, but I can see that the 4-hour has reset, stochastically speaking, probability wise, and the Williams has come down nicely on the 4-hour. So is it a gold play for where people store their assets in this time when they take profits out of other things? And you could see some sort of breakout parabolically to that region. I have no idea. 4-hour and the hourly and the 15 are suggesting something brewing, although in the daily time frame still has juice to go. The 3-day and the weekly, so this is unique in that it has more time to go on the daily, but the 3-day, 5-day, most likely 5-day and weekly are cooked. This is why Momentum Master has all these cool features. You can see all these time frames at a glance, so you don't have to guess or waste time switching between time frames. You can see them all on the screen no matter what time frame you're in. Quite nice. So it looks like you're seeing the dump similar to Bitcoin, though. It looks like a very similar kind of dump off, take profit region at that 706 region of the fib level. If we go to the daily time frame, let's just take this basic fib retracement from here to there. So the 236 level of the trend-based fib also coincides with the 706 of this impulse. So similar to the stocks, you could come back into this region for a potential bounce out of here. You are getting 6 time frames oversold rather, so that 4-hour bullish reset though, what does that mean? Does that mean you get some sort of bump up here while everything else takes a full retrace? I mean, realistically speaking, you do have some gaps down below, so let's look at that, shall we? So previously, when you got 4 time frames oversold, you did see some bounces here for gold. So you could be seeing the same thing off of this weighted or adaptive moving average if we're still in bullish territory. A realistic move would be from the 618 would be a healthy retrace. But if you're in this bullish ascending channel manner, how do you get an ascending channel without having to guess with random trend lines? You can use the regression trend tool. You can go to your trend line tools, go to regression trend and parallel channel and favorite those because they're my favorite. And you just do 2 clicks. Bing! There you go. You got an ascending channel. And then if you want to put an actual parallel channel, you do click, click, and then you can expand it and then click again. And then I can remove this. And that will help you see where these channels are without having to guess. No guesswork. So if you don't have, if we break this fib line region, then you can come down into these, recover some of these gaps down here, and then bounce out of there if you're bullish, or completely come down to the 618 and look for a bounce there. For gold, looks like it's been trading very nicely for the gold players out there. That might be why the dollar's not taking off. Nobody sees it as a strong store value, but we are getting some rise up here as Bitcoin and the stocks start to see a tumble. 29.4 now. We're going straight for that arrow we had for the last 3 days or more. I think we might have had it back in Wednesday or something. We've been tracking those pools for a long time. I lose track of time that way. So, yes, where do you look for divergence? Jason Casper calls it chickens drinking water. So you look for that chicken drinking water rejection off of the 618, and you can find that bounce nicely off of these liquidity pools down below. You don't just enter willy-nilly off of anything. Why did we see this bounce previously? Well, this is a fair value gap here, and that was why we had that bounce randomly, seemingly randomly. But it also happens to coincide with this outskirts of the Keltner channel, which is a ATR-based Bollinger Band type thing, which is quite cool. Alright, ladies and gents, I want to get prepared mentally for the 250k challenge. I already passed one today for 50k, so I want to get the 250k up and running and get funded. You got the links for that in the description as well if you want to join the Momentum Master Army. We're growing slowly day by day, so we will get you funded if humanly possible. Try it out if you like. Alright, let's see who's out there. Booyah. Alright, ladies and germs, we are out of here. So, once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We bring the fire, we bring the liquidity, we bring the fun little skits and whatnot. So please consider coming back and checking it out in the future. Hopefully we give you those precise entries as well. So once again, thank you very much, and I will catch you on the flip. Peace.